Magnis here from BG Trading. Hope you are well. Today I'll be talking about iron stocks, BHP, RIO, and Fortescue. And also I'm going to be adding at the end a fourth company that also has lithium in its portfolio. So if you want to understand why those iron ore stocks are falling, what are my predictions, and also I'm going to be dismembering the revenue compound, so you understand what exactly type of exposure you have in each of these companies. This is the video that you need to watch. So let's have a look. Just want to remind you, this is not a financial advice, just me from BG Trading sharing with you how we apply our strategies, how we understand the value and the fundamental aspects of the companies so we can make better decisions and apply our strategies to buy and to sell stocks and then lock in 20 to 40% in average profit per trade. If you like this video, please subscribe to the channel and share with someone that you believe could be helping. So now let's have a look what's happening. Iron ore, first of all, we're going to open up my latest analysis I've just done today. I would love to share with you. So if you want to have access to this full analysis and read in your time, so make sure you become a member of our Facebook community, Buy Growth Sell Strategy for Share Traders. I'm going to be putting the link over there. Now, iron ore price crash. This is amended analysis I've done early October, where the iron ore was above $100. So we had targets. For Fortescue around $15 was Fortescue was trading $18. We had target $15. In fact, it's reaching $14. So target ticked. So now, what happened last week? We had a little bit of rebound on the share price. So went almost 20% up, and then we took a little bit of a trade on this. Just because we had all our KPIs pointing a bullish intersection level 1. However, 2 days ago, we decided to lock in 5% profit because I now believe there could be a further low as iron ore price has continues to test its 52 weeks low under $90, $9 a ton. So very careful there. So first of all, talking about Fortescue is a company that has, I'm going to just, so you understand the revenue compound, is 100% of the company revenue come from iron ore. It's full exposure to iron ore. So you got to make sure, if you want to have full exposure, this is the risky stuff, but as soon as iron ore start rebounding, this is probably the one that's going to move faster and in a wider range. So it can be a two-way knife. So you got to make sure you understand that Fortescue is a stock that is definitely fully exposed to iron ore. Now look this, as you can see, we had this massive collapse on the share price, which bottomed around $14, but because iron ore still tests its 52 weeks low, I have a feeling this was a bull trap, and we could see again Fortescue trading at let me just go here, Fortescue FMG trading at the $14 level sort of thing. And then if breaks out, we could see our target for Fortescue around $12 to be fulfilled, and there could be an entry, all right, but we got to make sure we understand that iron ore price has to bounce back to make a valuable purchase. Otherwise, the company will most likely reduce its dividend and the revenue will decrease as well over the next couple quarters. Now let's move to Rio Tinto. Rio Tinto is a little bit more diversified stock, a company, sorry, a little bit more diversified company. We still expose about 60% of the company revenue comes from iron ore, 20% from aluminium, uh, around 10% from copper, and also 10% from energy like uranium and other sort of minerals. Now, because we have 10% copper in Rio Tinto, you see like there was a recover, so as a correction of copper prices over the last 2 weeks, then that actually had put a lot of pressure on Rio stock price, and not just Rio, especially BHP. I'm going to show you later on once we get into BHP. So as you can see now, if copper price is still correcting and iron ore stays at the under $90 US dollars a ton, I believe that we could see Rio going to down to $80, and will be effectively our next target. So Rio potentially going to $80 or under as target two. As you can see, our last prediction we did really well. BHP went down to Rio went down to 90 cents, but now we could see a further pressure. Now, moving towards BHP, which the world's biggest diversified miner. Now that we know they sold the oil and gas asset to Woodside, they're no longer exposed to energy. That has pretty much broken its revenue now. If we're going to look at the distribution, 57% of BHP revenue is from iron ore, and then 20, almost 30% from copper itself. As you could see here, in the copper correction, then plus iron ore. So then obviously put more pressure towards to the downside, as well as Rio, than Fortescue, because Fortescue is not exposed to copper. Yes. So that's why Fortescue went up a little bit more, has actually outperformed Rio and BHP during the last 2 weeks. And I mean, this is my assumption according to our strategy, okay? And then BHP went down. Now it's hitting the floor again, what we call hypothetical support channel. And this type of movement, as you can see here, let's open up on the chart, BHP. So we normally we want to buy at the bullish intersection, but as you can see here, it's failed to make a bullish intersection. The only stock that actually did a bullish intersection was Fortescue, which I believe could be short-term bull trap. So it's now hitting the support again, and it doesn't look good. I wouldn't buy now. It looks like could go down to 32 or even $30. So we're putting another target, provided that now our initial target was fulfilled. So I'm putting another target around 32 cents or even $32 and even $30 for BHP. So all bearish at the moment, guys, all bearish at the moment. Now, a stock that I want to talk to you about it is Mineral Resources. It's Australian fifth largest iron ore producer, but this company in particular is diversified differently. So the ASX code is MIND, and it has a little bit of lithium in its portfolio, which it's interesting. And also, I'm going to show a article that I showed last week. One of our VIP members sent me the cheapest lithium stock in the market. And this is one typical problem of when people read articles. People just read briefly the article and don't go inside the analysis, doesn't do any analysis of the stock. And what happens is when you read this, the cheapest lithium stock in the market, and then you look at, okay, mineral resources, wow, and you look at the chart, it's quite low, and you go and buy straight away. By the time I went to analyze the company itself, I found out that 80% of revenue is actually not from lithium, it's actually from iron ore, which put us into iron ore exposure, not actually lithium. Only less than 5% of the portfolio is lithium. And look, even though lithium is at a price, it's not going to affect the share price. 15% is also commercial servicing for other mining companies. So mineral resources. Now, the reason I have put mineral resources here as well is because it's highly exposed to iron ore as well. So for me, it is also a good company to watch and potentially buy at the next bounce back. I believe that mineral resources will keep falling and we could see potentially it around $30 a share. Okay, so be careful. Bottom line here, be careful with materials that you read around, and before making decision to buy stock, make sure you understand the fundamentals of the company, and then you make the decision. All right, this is really upsets me, the fact that we read things like that. The cheapest lithium stock in the market. Pilbara Minerals definitely is it's an interesting lithium stock. Has much more exposure to lithium, but mineral resources is sorry to say that, but this is a misleading information, guys. This is my taking on iron ore. I believe look, iron ore is still heading towards new lows, hitting 52 weeks low just last few days isn't a good thing. So until we see a very compelling bounce back on iron ore price, I wouldn't touch on those iron ore stocks unless for very small trades. But remember that very small trades against the trend can be dangerous, so we need to make sure you know what you do. So we've done that with our VIP members, but I don't suggest you doing just if you don't have experience. It's more for advanced trade. Guys, this is my take on iron ore. Hope you enjoyed. I'm still bearish about all those four companies, and we're just gonna be watching and waiting patiently to buy at the right time. Hope you enjoyed the video, and I'll see you in the next time. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.